What's up, everybody? This is Jack from Crypto 49er, bringing you my knowledge in cryptocurrency. So today I want to talk about manual backtesting fib trend lines. But before I do, I just want to remind you guys that I'm giving away $10 this week on Steemit because you guys weren't able to answer last week's question. So anyway, in order to win, you need to answer the trivia question that I asked on Wednesday. Good luck, everybody. Back to today's topic, fib trend lines. So this whole thing came about because if you watch Litecoin as much as I have in the last, I don't know how long it's been, like in the last 2-3 weeks, and he brought up the fib trend lines a lot. This is one of the indicators that he used to determine when to buy and when to sell. So the idea is very simple. So you see this is the green one is the 8, the purple one is the 13, the orange one is the 21, and then the yellow one's the 55. So as long as the yellow line is supporting the other three trend lines, that's when the market is bullish, and that's when you should have a position. And that's basically it. You want to buy in when, as Philocon called it, the 8, the 13, and 21 fans out from the 55, kind of like this. So he just says fans out. He didn't really specify. And the inverse is if the 8, the 13, the 21 dives below the 55, that's when you're supposed to sell. So he said that you have to wait for the 21 to completely dive below the 55, then you're supposed to sell. So that is a very basic strategy, and I'm thinking, why don't I actually test it out and go through the history to determine how good this particular indicator is. So that's exactly what I did over the weekend, actually. And one thing he also mentioned about this strategy is that this strategy requires a higher time frame, something along the 2, 3, 4, even daily, in terms of the time frame. So I selected the 4-hour time frame here, and I just went through I went as far back as last year, picking like a pretty bullish session. So this is what I found out was the bull market. So I just want to see how well it does during the bull market, and then how well it does during the bear market. The bull market is November 1st to January 17, and we all know that after January 17 is pretty much the bear market. But let me go over how it looks in terms of the bull market. So in this chart here, I charted when to enter and when to exit the position. And I selected a theoretical $1,000 amount, so something not super large, but something that is sizable that you can actually see how much of a profit you can make. So as you can see here, from November 8th, when you put in a buy order, you will end up exiting on December 7th. So almost a month later, you'll be holding this position for a month. But when you exit out, you make a profit of over $300 in the first trade. And then you repeat that again the next day, because the next day, believe it or not, you buy into it again at $503. And let's go in to show you exactly what happened here. So you can see that November 7th, that's when it dived down. The 8, the 13, and 21 dived down below the 55. And then the next day, it went back up. The 8, the 13, and 21 went back above the 55. So this is what you're supposed to sell, and this is what you're supposed to buy. And that's what basically I did with this strategy. So from February 8th, you buy back in, and then you sell again on December 30th, because the 8, the 13, and 21 went below the 55. And again, you're making, this time, $400 in profits. And then the last time is in January 1st to January 16th, and this time you made $338 in profit total. So we're talking about like these 3 trades combined end up profiting you $1,117 during the bull market. But here's the problem I have with this trade. Well, here's one minor problem that's not as big deal, but it's a big one. There's 2 problems. The first one is this being a swing trade position kind of thing, where you end up holding for almost a month for most of these trades. Like from this one was about a month. This one's a little bit less than a month, and this one's only 16 days. But it's a very long time frame. So it is one of those where it's not bad, But then if you like to day trade, like I was aiming towards to day trade with this strategy, it just doesn't work. You don't really day trade, or even swing trade, because unless you consider swing trading, which take as long as a month, then I guess it's a swing trade. But it's a really long swing trade, because I would think swing trade lasts about like a couple of days to a week or 2 at most. This is going to a month long. That's why I didn't like this strategy. But here's the bigger problem with this strategy. If you just hodled it, so let's say that you bought in around this time, and then November 8th, you bought in at the first trade, right, on November 8th, and you don't sell until the last one, until the exit of the last trade. So basically, you just make one trade. You buy in on November 8th, and you sell in January 16th. Guess how much you make? You would make $2,215, literally doubling what you would have made if you have done the 3 trades following the strategy that Silicon pointed out. So I'm not saying the strategy is bad. I'm just saying that hodling in this case is better, because that's what happens. In the bull market, you probably just should hodl. That's what it's telling me. So this strategy you still make money, obviously, but you end up making 50% less than just the hodl and sell strategy. Obviously, it's not complete hodl because you still have to sell. You just end up selling at pretty much right at the end. So rather than just buying in and coming out, you're just really selling when the FUD is really starting to set in. This is January 16th, is around the time when the Korea FUD was happening. So now let's go ahead and test this strategy in the bear market. So in the bear market, I tested this strategy again, and I found that it got stopped out 2 times. So you see from January 17 and on, it started diving downwards, and it just recovers very little right here, and then you get stopped out. And this is what happens. So you get it happens again over here around February. The 3 other trend line goes above 55, and then it comes back down again, and you just get stopped out because the position you buy here is actually lower than the position you end up selling here, because you have to wait until the orange line actually comes below the yellow line. So that's why you end up getting stopped out. And that's what happened with 2 trades. So it's 2 entry point, 2 exits. Both the time you get stopped out. I set a very tight stop loss so that you end up losing only $30. If you don't set a stop loss at all, we're talking about like you losing 10%, close to 10% for each of these trades. So this is more like $200 loss. From a $1,000 investment, you're losing $200. So that's pretty steep. So this one, on April 11th, we don't know exactly what will happen. It looks like you probably should profit, because it seems like we are turning the corner in terms of the market coming back together now. So it's actually peaking, and you should probably turn a profit with this particular trade. But we don't know at this point in time. So my point is this particular strategy doesn't work that well, and it doesn't give you many opportunities to buy in and sell into the market, because you only end up buying a few times, literally not many times. Like during the bear market so far, 3 times. So basically making 1 trade a month, and about the same thing during the bull market. So not a lot for you to play with. I mean, I know it's about earning money, but you still want to get that excitement, that rush, that adrenaline when you buy into market, and kind of really looking forward to how high it can go. And with something like this, you're just not playing the market as much. So what I end up trying to do is moving down to much lower time frame, a 15-minute time frame. And also what I did was I was changing the strategy a little bit, because with Silicon's strategy, it is a 4-hour chart. I'm now moving to a 15-minute chart. But the other thing I want to do is clearly identify when to actually buy in, because I didn't like the fact that we zoom in over here. You can see, oh, it's fanning out, but what is considered fanning out, right? Because in this particular case, it works. But again, let me go to the 15-minute chart first. And you'll see a lot of these little ones right here. So I'm going to zoom in here, and you can see it. So these little ones, it obviously fanned out. Look at that. It fanned out, right? This is when you should buy in. But all these little positions, because it's such a low time frame of like 15 minutes, when you buy in over here, because you have to wait till it fan out first, you buy in over here at 511, we're just taking the close position. So when the candle closed at 511.57, that's when you bought. So approximately, there's no way we guarantee you're buying at a particular price, but you're just waiting for the lines to fan out, and the best way to see it is wait till the candle close. So again, in this case, we waited till it closed at 511.57. But when you wait till the orange line comes down, which is around here, 493.48, you're definitely losing in this trade. So that's why I needed to modify this strategy so that I know exactly when to buy in and when not to buy in. So what I did was I set this heuristic to saying wait till 8-day EMA is 2% greater then 55-day EMA, then buy. So if it fanned more than 5% when you're sleeping, do not buy until next opportunity. So it's very straightforward because right now this is a manual trading process. It's manual backtesting, but it's also a manual trading process. There's no bot involved. So if the trend lines fan out during 2 a.m. when I'm sleeping, I can't buy into it. So I need to wait until the next opportunity, because if I try to buy in when it already fanned out, more than likely I will be losing money. The other thing, as I mentioned, was I wanted to make sure that the fan out really equates to a bull trend. So I wanted to make sure the fan out has a specific percentage. So in this case, the 8-day got to be 2% greater than the 55-day EMA. So what that means is I look at the numbers up here in the fib trend line. You can see it. The 8-day is at 504, and then the 55 days at 503. So at this point, it's not fanned out yet, but you have to wait until a few notches over. But this one actually never gets to 2%, because if we need 2% fanning out, that means there need to be a $10 difference between the 8-day and the 55-day, and it just never reaches in this particular scenario. And that's why this heuristic actually works, because this particular heuristic would save me from actually entering into this trade. The other thing was the selling part. Instead of using just this trend line for sell, I end up using the RSI to indicate when to sell. So, and the idea is to sell 20% into the laddering sell purpose. So every time the RSI hits above 70, when it gets overbought, I will sell 20% the first time. The second time it hits it, I will sell 50%, and then the third time it hits the RSI hits 70, hits overbought, I will sell the remaining 30%. But the previous strategy also goes into play, but not the 21 days so much, but just the 8-day. As soon as the 8-day hits below the 55, I am selling. Because in this 15-minute much lower time frame than the 4-hour time frame, the 8-minute almost always indicates the same direction as 21-day EMA trend line. So basically, when the 8 goes through the 55, the 21 is guaranteed to go through the 55 as well. So that's the strategy I set up, and that's what I'm testing. One thing right off the bat, there's a lot more you can play with because it's a 15-minute time frame. There's a lot more trades you can enter into. So we're talking about, like, in the month of February, there were at least 15 trades that you can make. So that's pretty good for a month. So that's actually give you like almost a trade every other day, not including exit actually. So it's pretty much at least a trade a day. I also added some notes, obviously, with this current strategy. It does miss some highs, as I noted here. The only issue is with the profits, because this particular strategy, you're only earning $56. So it's relatively meager compared to a 4-hour trade. But again, you're holding months. This is 1 month, you're making $56. And again, this is more of I quote this as a bull market, quote unquote, February. It's really not quite a bull market, but with a 15-minute chart, you can't go as far back as last year. Anytime before February, they just don't have it. So let's just say we'll go to January, it won't even have that data. Let's just say last available bar, February. So that's the reason why I end up testing for bull market in February and bear market in March. So again, in the bull market, I was only able to make $50 with this particular strategy. And during the bear market, I was still able to make money with this trade compared to the 4-hour trendline one, which I end up losing money because of getting stopped out twice actually. So I end up losing $60. But in this particular strategy, I end up still making money, even though it's even less than the bull market. So this is what I've been doing yesterday, and this is pretty much the strategy I've been trying to figure out in terms of how to create a strategy that works during the bull and the bear market, and at the same time let me almost day trade. I wouldn't say exactly day trade, like, actually be trading several times a day, but it gives me definitely a swing trade position where I'm trading almost every day using this particular strategy. So that is my video for today, guys. I will be covering other strategies that I have trying to come up with. As you can see, I have quite a few other strategies I have been testing over the past few days. But so far, I just want to cover this particular strategy today and let you guys know the results that I got from backtesting it. So let me know what you guys think about this strategy. Let me know what strategy have you guys implemented in the past, or have you guys backtested in the past that have worked or have not worked. Leave a comment about it down below. As always, I appreciate you guys for liking my video and for subscribing to my channel. If it isn't crypto, it isn't worth mining, it isn't worth speculating. I'll see you guys tomorrow. Peace out.